Hey traders, Jason here from Leavitt Brothers. Hope you're well. So in this video, I am going to talk about what I consider to be my favorite indicator. Okay, the indexes are good. Okay, you could look at the indexes. I do. Breadth indicators, internals, whatever you want to call them, they're extremely helpful. I look at them a couple times a week, and then I write about them a lot over the weekend. I've done numerous videos where I talk about breadth and the state of the market. But the reality is the number one indicator that you have is simply the performance of individual stocks, how individual stocks act. If individual stocks are acting well, the market's going to do fine. If individual stocks are not acting well, then the market's not going to do fine. So what I'm going to do in this video is I'm going to show you a lot of the charts I was looking at 2 weeks ago, 4 weeks ago, 6 weeks ago that told me something was not right with the market. Okay, if you only look at the NASDAQ and S&P, those indexes have been near, they were near their highs as of just a couple days ago, and you would think the market is doing really well. But if you look under the surface and you look at the movement of individual stocks, you would have known that the market was not doing well. Okay, so the purpose here is I'm going to show you a bunch of charts, maybe 20 charts that show you what I saw playing out 4 weeks ago, 6 weeks ago that kind of warned me that something wasn't right. Okay, again, it's the movement and performance of individual stocks that is your best tell. That's all I'm going to talk about here. In the past, this is my YouTube channel. 13 days ago I did a state of the market video. 3 weeks ago I did a state of the market video. 1 month ago I did a state of the market video. So I'm not going to rehash those. I'm not going to go back in time and say, hey, the warnings were there. Look at this indicator. Look at the breadth. Look at advanced decline line. I'm not going to do that. Instead, I'm going to look at individual stocks and show you what I was looking at that told me something wasn't right with the market and path of least resistance was probably going to go down. All right, so let's go through it. So here's Airbnb. This is a stock that was posted at Leavitt Brothers. It had suffered a decent drop over here on the left side of the chart. It bottomed out, bottomed for a couple months, started moving up, and this was profiled at Leavitt Brothers several times. It did really well after it broke out here. It did really well after earnings, but you can see here it fell pretty quickly and gave everything back. Okay, the failed breakout is a warning. If the stock would have held in some sort of range up here, that would have been great. The fact that it broke all the way down and completely filled the gap and gave back its entire earnings-induced gains was a warning. Here's Adobe, super strong stock, super high quality stock, broke out right there, gave it, broke out here, gave it back, tried again, gave it back. You can see the 21 EMA here, which is orange, and then it just completely sliced through there. Okay, failed breakout, attempt number 2 failed, warnings were given. It didn't matter what the S&P 500 was doing. The movement of Adobe told us something wasn't right, because when a super high quality stock breaks out and fails and then tries again and fails, something's not right. Next up, AEHR. This is a stock that that was profiled at Leavitt Brothers a couple times. You can see there's breakout here. You can see this nice little kind of cut pattern that kind of found support at the 21. Then it came up here, traded in a range above key moving averages. It moved up, which is nice, gave most of the gains back, and then just struggled after that. No volume on the breakout over here, support line over here, and then you can see that it just sliced through support. Okay, so if the stock would have it didn't even have to continue trending up. If it could have just done this and moved sideways above 22, that would have been great. The fact that it completely broke down and gave back all these gains so quickly was a warning that something was going on. Here is APP. Stock broke out over here. This is a great pattern. I love stocks that are kind of like weak. You get a good buy off of a low because you probably get a divergence down here with one of the indicators. Stock moves up, moves sideways, gets cupped by the 50-day moving average, which is the blue line here, and then breaks out and runs. As you can see here, though, right over here, it breaks out and then immediately gives everything back. Okay, that is a warning. Okay, it is a warning that something's not right. The fact that a strong, healthy, uptrending stock gave back so much of its gain so quickly tells you something's not right with the market. Here's Bill, similar kind of a situation, not easily tradable, but you can definitely see here that we had a move up, then a sideways range for 2 months, stock breaks out and then gives everything back. That's a warning. Coin, stock was doing really well, went public, had this big kind of cut pattern. You can draw a trend line, you know, various ways to draw trend lines in here, but however you draw it, you have a nice cut pattern, stock breaks out, runs up. You got some pretty decent volume over here. But then once it establishes support at 320, the fact that it takes out that support at 320, comes back up, gets rejected by the 21 EMA, and then falls again, that's a warning. Salesforce.com, similar situation. You got a strong uptrending stock. We didn't play this one at Leavitt Brothers, but I still use it as an example here. Stock breaks down below its 21, comes back up, gets rejected by the 21, comes back down, and then gaps down. Okay, strong stock, healthy, doing well, trending up, suddenly breaks down. That's a warning that something's going on. Okay, doesn't matter what the S&P 500 is doing, doesn't matter what the Nasdaq's doing, doesn't matter what news is going on, tapering, interest rates, seasonality stuff. It doesn't matter. When you have a super high quality stock like this that breaks down, that's a warning you need to listen to. That's your number one indicator. Okay, CrowdStrike attempts to break out here, comes back down, touches the 50, attempts to break out again, comes back down. Then it gets trapped underneath the 21 here, and then it completely falls apart. Okay, strong stock that's typically volatile. 2 times it tried to break out, both times it failed. That's a warning. DigitalOcean, strong stock trending up. We played this at Leavitt Brothers, came up here. We have a resistance level, tested the 21 there, moves up, resistance level, test the 21 here, and then trends up, and then holy smokes, it just gives everything back like all at once. Okay, comes down, comes up here, gets rejected by the 21, and then completely falls apart. That's a warning. Okay, if you see this happening, nothing else matters. Okay, your number one indicator is the performance of individual stocks, and specifically, like, you know, your strong, healthy, uptrending stocks, growth companies that are doing really well, companies that have posted big gains, companies that you probably made money in. When those stocks start to fall apart, you exit. Okay, it doesn't matter what the indicators are doing, doesn't matter what breadth is, doesn't matter what the indexes are doing, you just exit. Okay, here's DOCU, don't need to mark it up. Obviously it topped, it was kind of moving down, but looking like a big topping pattern, which it could have, could have very easily resolved up, but it fell apart. Elastic, not an easy one to trade. We did not trade this one at Leavitt Brothers, but just because it's so many overlapping candles and stuff, it's just not a really smooth mover. But as you can see, it's like generally trending up, other than the dip here. Breaks out to a new high over here, attempts to break out here, but then all at once right here, it just slices through the 21 and the 50, gets trapped under the 21 here, and then completely falls apart. Okay, that's a warning. When a super high quality growth stock falls apart, that's a warning. In mode, this is one that we played at Leavitt Brothers, broke out here, then struggled for a couple weeks, and then just lost that previous level. And as you can see, it gets trapped under here under the 21 and then falls apart. Matterport, this is one we played at Leavitt Brothers, broke out here. You got touches along the 50-day moving average, breaks out and comes here, tests down here after earnings, consolidates above its 21 and then breaks out. Got a messy consolidation pattern here, breaks out again, volume's very good, and then in a matter of 4 days, it gives everything back. Okay, that's a warning. Okay, it's completely out of character. If you compare this, what happened here, to everything that's happened here, you know that something has changed, and when something changes, you got to make note. Okay, you cannot be head down, just plugging away, executing your system. You have to put your head up and see what's going on, and when there's a message that's being given to you, you got to listen to it, and you got to do what it tells you. Okay, net. This was a borderline historic move, just up and up and up and up and up, day after day after day after day after day. And then right here, we got a big move down. Okay, stock comes down, tries to rally back up, gets rejected, and then just completely falls apart. Tries to rally again, falls apart. Okay, that's a warning. Okay, if net was really strong, if the market was really healthy, you would expect some backing and filling here, something like this, you'd expect even an extended rest. That's perfectly fine. But if a high quality growth stock falls apart, that's a warning. Okta, not exactly trending up, but similar situation where stock was doing just fine. Okay, it had moved from 230 up to actually like 225 up to 270. Completely falls apart here, as you can see, several days in a row. Okay, that's a warning. Something's not right with the market when that happens. Shopify, breaks out here. That's a big up candle. That's really attractive. If the market was healthy, if this stock was healthy, the stock would have come up. It would have come down and maybe tested a key level. Maybe it would have bounced around, and then it would have continued up. But the fact that it did this is a warning. Okay. Again, your number one warning is the performance of individual stocks. Okay, Snap did really well for a long time, then got crushed after earnings. Snow is a stock that we played. There was a play over here where you got a resistance there. You got a little cut pattern here, right at the 50-day moving average. Steadily moved up to our target at 400. If it was strong, it would have slowly moved down, found support. Probably at like 360, come back up, consolidated, and something like that. But instead, in one felled swoop, it did that. Okay, there's a difference between slowly drifting down over the course of a couple week or two versus just a horrific down day like that. When that happens, that definitely should get your attention. So it does that, it comes up, fails at the 21, and then does that. So a super strong growth stock, doing great, leading the market, and out of nowhere it just completely falls apart. That's a warning. Splunk, out of nowhere, gaps down, posts a big loss. Team, okay. If you look at the character of the stock here, lots of small candles, pretty steady movement, nothing outrageous, not very volatile. Gaps up over here. This movement over here is very normal, and then out of nowhere, in 2 days, it just completely falls apart. That's a warning. Unify, another stock we traded several times at Leavitt Brothers. It kind of rode up, and seemed to hit like an inflection point over here. So it goes up and then gives everything back. Okay, that's a warning. If it would have just kind of slowly drifted back like this, that would have been fine, because the moving average would have probably come up and scooped it up, and it would have bounced. But the fact that it just fell all this way all at once without even attempting to bounce, that's a warning. Upstart did really well. Right over here, the market was making a new high, and this stock was well off its high. So that was a warning by itself for this individual stock. Then it gaps down, and you can see what's happened. Okay, ZS, another growth stock that had done incredibly well. Okay, got a little bit of a warning shot there where it gapped down and posted a big loss, certainly bigger than any other day here. Then it tries to rally. We got another gap up and another huge candle there. Okay, so the one thing I want to drive home here is the indexes are great to look at. You should look at them. Breadth is great to look at. I look at them all the time, and I write about them, and I do videos about them, and they're extremely helpful. But your number one indicator is the performance of individual stocks. When individual stocks are acting well, the market's going to do just fine. When individual stocks are not acting well, the market is not going to do fine. Okay, so any analysis you have has to entail just flip through 100 charts and just ask yourself, are these charts in good shape, or is something going on that is out of character that would tell me something's changing? Okay, because on the surface, the market can continue doing fine. Beneath the surface, if you start seeing some stocks fall apart, you should listen to that warning. All right, thanks for listening. Hope you got something out of this. Come check us out at Leavitt Brothers, where we offer trading ideas and market analysis to individual traders, some hedge funds, etc., etc. Also, if you're not the kind of person that wants to subscribe to a service, but you want to learn how to trade, go check out our Masterclass. You can go check it out at the top of the homepage. Just follow that link, and it'll tell you all about it. All right, again, thanks for listening, and I will see you next time.